All right, folks, let's dive into today's stock market insights. First up, we saw a mixed performance across the major indexes. The Dow Jones Industrial Average nudged up by 0.3%, while the S&P 500 remained largely flat, and the Nasdaq Composite dipped slightly by 0.1%. These modest movements signal a cautious optimism among investors as they digest a fresh batch of economic data. Now let's talk about earnings season. Big tech giants like Apple and Amazon reported their quarterly earnings, and the results are quite telling. Apple beat expectations with strong iPhone sales and services revenue, pushing its stock up by 2%. Amazon, on the other hand, delivered mixed results. Strong growth in its AWS cloud division, but weaker performance in e-commerce, leading to a small drop in its stock price. Shifting our focus to the economic landscape, today's job report showed an increase in non-farm payrolls by 187,000, slightly below the forecasted 200,000. This data is crucial as it impacts the Federal Reserve's stance on interest rates. A slower job growth might hint at a pause in rate hikes, which could be a positive signal for the stock market. On the commodities side, oil prices have been fluctuating, with Brent crude trading around $83 per barrel. This is partly due to geopolitical tensions and OPEC Plus production cuts. Keep an eye on these developments, as they can have significant implications for energy stocks and broader market sentiment. Cryptocurrencies today are showing some volatility. Bitcoin is hovering around the $29,000 mark, down by 1.5% from yesterday. Ethereum is also down by 1%, trading at approximately $1,800. These movements are often driven by regulatory news and investor sentiment, so stay updated. Sector-wise, the healthcare sector showed robust performance today, driven by positive news from biotech firms reporting breakthrough treatments. Conversely, the consumer discretionary sector lagged, reflecting some cautious spending behaviors among consumers amid inflation concerns. And finally, let's talk about market sentiment. The VIX, often referred to as the fear gauge, is sitting at 17, indicating a relatively low level of market anxiety. This suggests that, despite some mixed signals, investors are not overly concerned about imminent risks. So, what does all this mean for your investment strategy? Diversification remains key. Keep a balanced portfolio, stay informed with the latest market trends, and avoid making impulsive decisions based on short-term movements. That's it for today's stock market insights. Remember, informed investing leads to better financial decisions. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. Until next time, happy investing!